welcome, and thanks for joining us here on Market Call. Morella Fernandez. Brendan Caldwell on the show today. He's president and CEO of Caldwell Investment Management, and taking your question today on North American large caps. Here's how to reach us. You can call toll-free 1-855-326-6266. You can also send an email, marketcall@BNNBloomberg.ca. Brendan, thanks for coming in on what is a crazy day across
Morella,
the world.
thank you for scheduling me today. This was very kind of you.
We didn't plan this on purpose. You were scheduled well in advance. It just happened that way.
Didn't the Illuminati inform you this is happening today?
Maybe they talk to you. They don't talk to me. Okay, let's talk about when the last time you saw something like this was. Was it 2007?
In regards to what respect? Forgive me.
In the streak of red and the deep dive on the markets.
No. The last time we saw a streak of red and a deep dive in the markets was March of 2020, when everybody thought we were all going to die. And that came back fairly quickly. This has a little bit of a different feel to it, and I think your analogy is probably or could be correct. We haven't had a proper bear market in North America for I don't know how long. It's been, really since 2009. So we've had 16 years of a bull market punctuated by some minimal corrections, relatively speaking, in the grand scheme. Some were quite exciting, like 2020 when they happened. So yes, it could be that we're seeing the market turn over right here and heading for a bear market. That is a possibility, but we can talk about it further.
Let's look at the numbers. 737 down for the TSX at this hour, S&P 200 down, and the Nasdaq down 841 points. It's actually come back a little since the start of the day. It was worse. Let me ask you, first of all, are all sectors getting hit? Is that what you're seeing, or is it mostly tech, or what is it working out to when you look down the numbers?
Well, how would one say? It's been more of the same. The Magnificent Seven, so-called, the NVIDIAs and the other six of the world have really been the ones leading the market downward. They're the ones with the highest multiples, and they're the ones that have been actually lagging the market really since, at least since the inauguration, probably since the beginning of the year. So they're the ones that have been hardest hit, but other sectors are doing relatively well. Of all things, dollar stores like Dollarama here in Canada or Costco in the U.S. You would have think that with all of the tariffs on retail products that are generally made in developing countries, and I think that's one of the things that caught people by surprise. I mean, we're hitting with Madagascar with, I'm pulling numbers slightly out of the air, but like a 58% tariff on Madagascar. I mean, the price of the sequel's gone right through the roof.
So let's talk a little bit about how you advise investors when they're going to panic, right? I mean, many have been panicking already for the last month and a half, and now they're watching this happen. Is it best not to tune into the fine print on a day like today, or what do you say to your investors?
No, there are some good and proper times to panic. I'm not sure today is it. In our strategies, we have a reasonable amount of cash, between 20 and 40%, depending on the strategy. We should have had 100% going into today. But if the tariffs were less robust than people had expected, the market would actually be on a tear the other way, perhaps. But I think if someone is adding to their portfolios on a regular basis, either by investing cash they have stored up, or if they're doing some sort of regular contribution plan, these correction days are actually really, really helpful because they provide excellent buying opportunities. And I would say that even if tomorrow the market's down even more, because for so long, people have said that, I wish I'd got Tesla at such and such a price. Tesla has actually gone nowhere for the last 4 years. You could buy it at 2021 prices. Now, is it a good buy right here? That's another question. But if you'd always wanted a chance to get into some of these stocks, today's not a half bad day to start.
Even if it goes down tomorrow?
Even if it goes down tomorrow. I'm not saying never mortgage a house to buy stocks. But if you have $10,000 to invest $2,000 today. Because it will be easier to make the next decision tomorrow if you started with a smaller one today. If the market goes down, you can say, thank goodness I've still got 8,000 left. If the market goes up, said, thank goodness I actually started to buy. The second purchase decision will become easier once you made the first one, if it's small and not catastrophic.
Bit by bit by bit.
Bit by bit by bit. It's not ever going to be a 100% solution.
Got it. All right. Brendan Caldwell, President and CEO, Caldwell Investment Management, here to take your questions on North American large caps. I'm sure you have a lot of questions today. Here's how to reach us. We're back in a moment. welcome back to Market Call. Once again, thanks for joining us today. Brendan is here to take your questions. First one is an email from Wayne. He says, hi, what do you think about buying Visa at these levels? We'll have a look at what the level is right now. I might have changed a lot from this morning, but
could have gone any which way since I was in makeup.
Yes. Okay, so there we go. So 342 up or down $4, but overall up 22.89 over the year. So what's your take on how Visa will do now?
So we have both Visa and MasterCard in our portfolios. They are, I think the market's down just because everything's down. And perhaps the thought that if there is something of an economic slowdown, people will be slower to pay off their credit cards, or there will be, I don't know what the thought process is, but Visa and MasterCard generally make their money on transactions rather than the credit. That's more the bank side. And on also foreign currency transactions. So when you buy something in some other currency other than Canadian dollars, US dollars, whatever your home currency is. So perhaps the market's down a little bit based on the idea that maybe there will be less travel. Certainly there's been a little less travel to the US. We're still holding those positions, and I do think that they will probably be a very good leveraged way to play the growth in the economy, because they do. It's not quite a SaaS business, but it's a software as a service business, but they are very much a software technology business that benefits from any economic growth. Yes, if there is slowdown, they will come off, but they don't have the credit risks that, say, the banks do.
Got it. Okay, let's go to the phones. Paul's on the line. He's calling from Toronto with his question. Hi, Paul.
Yeah, hi, good afternoon, everyone. I just like to know about Tesla. So it is coming down. So just a thought, is it a good buy at around 200 or, 220? So, can I have your thoughts on it, please? And thank you so much.
Yeah, people still want to know whether they should buy in on Tesla since it is down so much. What are your thoughts?
Tesla's a funny one, isn't it? People who bought Teslas, 6 months, a year ago, 2 years, 5 years ago, to send one message, now have to put bumper stickers on their cars saying, I bought it before I knew whatever. Maybe they bought it before they knew that it had massive U.S. government subsidies. I don't know. So, Paul, I would say this. You mentioned a price of 200 or 225, I think. If it's going to be a good buy at 200 or 225, it's a good buy at 265. Because presumably you're not buying it to go from 200 odd to 265. You're buying it for the longer term. You're buying it because you think that there will be a continued interest in electric cars and the new technologies, and it's a proxy for Elon Musk and all the other reasons people buy it. So if you think it's a good buy here, if you think it's a good buy at 200, it is probably a good buy here. Again, what I said at the beginning of the show, if you really, really wanted to own Tesla, it's not one that we own. We can't get our brains around the valuations but if you wanted to buy Tesla, my strong suggestion is you buy 10% of the total amount you want to buy. If you're going to buy $25,000 worth of Tesla, buy 2,500 of it today at 265. Because my best guess, the market has a bounce back tomorrow. And if it doesn't, that's fine. You'll get your 200 or 225 price. But if it does start to go up from here, because you bought that little bit at 265, you will be able to continue to participate on the upside. If you do not buy a little bit today, when you've always wanted to do that, you will find that you will never actually do it again. You'll have missed it for a second time. That's just psychologically, that's how I've seen it work.
Okay, so again, just sort of do it at a level that you're comfortable with, very comfortable with today, and add in if the price is down.
Up or down, you will feel better about having bought a little bit today if you've always wanted to own Tesla. And it's not one that we own because, again, you are betting on a whole bunch of different things now, some of which had the political tailwinds. It had the support of and the goodwill of a large part of the populace. Not sure that that exists today, and I'm not sure that the current tariffs are going to be sufficient to support an electric car business that where the Chinese and others can make those same cars cheaper. My father has a wonderful expression. It's the second mouse that gets the cheese. And I think that the secondary producers of electric cars may end up surpassing Tesla.
I do want to ask what happened to the first mouse, but
where did the cheese get put? in a trap.
Got it. All right, let's go back to the phones. We have another caller on the line calling today from Montreal, and it's Amato. Hi, Amato.
Hi, good afternoon. My question is on Meta, seeing that it's not impacted by the tariffs, and if the economy does go down, people are going to advertise a bit more on Meta. So what's your opinion on Meta?
Well, it's an interesting one. I mean, you make an excellent point. Amato, I think it's how you said your name is pronounced. I think you make an excellent point. So you've got these technology stocks that you would think have nothing to do with the tariffs. Like, what does Meta, or the AKA Facebook, actually produce? What does Mark Zuckerberg produce in the world that would be subject to the Trump tariffs? Well, so I'm actually a little hard pressed to know why it would be down $30 today, other than it does have the feel of a capitulation moment where these magnificent seven stocks, of which Meta was one, have come off, and they've been leading the market downward all this year. That the down market today, the tariffs and all that are really an excuse for what people wanted to do anyway, which is to sell it off hard. So again, Meta's not one that we have owned. We have other of the Magnificent Seven, which we'll come to later in the show, but it is not a direct connection between what's going on in the political landscape and what everybody's talking about and Meta coming off. I think it is a little bit of the baby out with the bathwater.
Okay, so it should have a decent rebound when people figure out it's not affected by the tariffs.
I would think.
Got it. Okay, we're going to take a quick break, but Brendan Caldwell sticking around to take your questions. We're back in a moment. Welcome back. Thanks for joining us here on Market Call. We're going right to your phone calls. Rob's on the line from Calgary today. Hi, Rob.
Hi. Thanks for taking my call. I'd like to hear Brendan's opinion on Pfizer. On a day where the markets are a sea of red, Pfizer seems to be holding its own. Can you comment on Pfizer's pipeline and future prospects, or would you prefer another big pharma stock? Thanks again, and have a good afternoon.
Thank you.
Thank you. Actually, our big investments in healthcare have been around the health management companies like United Healthcare and some of the medical device companies. But Pfizer is an interesting one. You would have thought they'd actually be hit more by this, because one of the points that Trump and his minions, is that the correct term, have been hammering on is that all the components for the drugs are made overseas. Why are they being made overseas? Well, you would think that it would have a material impact on the cost if to onshore the manufacture of drugs. So I think the big pharmas got hit earlier in, like, last year. They kind of peaked. There was a lot of enthusiasm around, particularly around the weight loss drugs. Eli Lilly's been on a tremendous roll. But yeah, you would have thought that an industry that was so specifically mentioned would have had a much bigger impact. So the market's clearly thinking that somehow this is going to be a net benefit to the drug companies, or at least a net non-negative when it's up on such an enormously down day.
There's still discussion that pharmaceuticals like lumber for Canada could also get hit down the line. I don't think they're totally in the clear. With that in mind, would you invest in Pfizer right now?
Again, we're more into the medical device companies, where I think that you're going to continue to see, well, you do see better valuations at this point in time, and a little bit better trend. I don't think anybody's totally in the clear, because that was yesterday's announcement, which caught the market totally by surprise. I think keeping everybody off on their edge and surprising people is not a bug. It's, for the U.S. administration at this point in time, an actual feature. What they hope to achieve by it, well, I think it may be an end in itself, just to keep people guessing.
Got it. Okay, let's move on to David, who's calling from Brantford, Ontario. Hi, David.
Hello. Good afternoon. With all this turmoil in the market and the economy, would Mr. Caldwell think that the 6 Canadian banks would continue paying their dividends uninterrupted? Thank you.
That's a good question.
Well, it's a yes/no question, which is nice, because it does make it easier. Yes, the Canadian banks will continue to pay their dividends. They didn't even stop paying their dividends during the financial crisis. So It is a severely career-interrupting move to cancel a dividend on the best of times. For a Canadian bank, it would be catastrophic. In fact, all the Canadian financial services companies that I can recall, with the possible exception of Manulife, kept their dividends constant even through the financial crisis. So I would not see this being a dividend-cutting moment. I mean, some banks are stronger than others. The Royal Bank is the 800-pound gorilla that all the other banks are chasing, really. TD Bank obviously has its issues in the United States, but you'll notice I think even TD Bank is up $6 or $8 or $10 from where it was when the sanctions by the U.S. government were announced. So there is a tremendous amount of resiliency. The Canadian banks, if nothing else, are a severely protected species.
Got it. Okay, so you can count on the banks at least as far as we know. Let's go to Louise, who's calling from Okanagan Valley in the BC. Hi, Louise.
Hi there, Brendan. I like your Canadian red tie.
Thank you. Thank you very much.
My question is on the FANGs, but specifically Alphabet. I'm thinking of stepping in right now. Would you agree with that, or would you choose another of the FANGs?
Thank you. Should you buy Alphabet today? Again, my argument, Louise, is if you really want to buy Alphabet because you believe in their approach to AI, or you believe that the concerns about advertisers not being as robust or are overblown, or you think that the FANG stocks, to use your particular acronym, are, I think they're Mang now that Facebook became Meta, but no matter, that those concerns are overblown. And I think it might be Mana because Google was Alphabet, so yes, or Alphabet was Google. If you like Alphabet and are thinking of buying some at some point, then yes, I would suggest, not recommend, but suggest you buy some today for all the reasons I talked about. If this is, you always wanted to get into one of these stocks and it was always too expensive and you missed you didn't buy in when the market cratered in 2020 and the 5-year run, you just never got a chance to get in, you will likely be early. Tomorrow may be a tremendous up day. Tomorrow may be another down day. I don't know. But if you, again, looking to buy $25,000 worth of Google for your portfolio, start with $2,500 today. You don't have to be 100% right, because if it's worth buying here, it'll be worth buying at 20% lower or 20% higher if the Western world continues. And I think despite the best efforts of the U.S. administration, it will.
Got it. Okay, we're going to take a quick break. When we come back, a look at Brendan's past picks. That's coming up next. Stay tuned. Welcome back. Time now for Brendan's past picks. This is May 6, 2024. And here is his top pick on that day. Aris Management, which at the time was 136.17 American, and now up to 135.13. So down 1%. Up 2% total return, and we were kind of laughing at the break that you're coming back on a day when everything is kind of getting hit, so everything's down.
So if you haven't been back in 6 or 9 months, I'm going to look like a genius no matter what I pick today.
Absolutely.
But so 9 months ago, up 2% looks like a win. So we actually exited this position at the beginning of March. Ares is an interesting play on the private debt market. So with Silicon Valley Bank and some of these other public lenders to the technology community going out of business, there is a huge market now for private debt. People talk about private equity, buying equity stakes, stock of technology companies and others, but Ares Management participates in the debt. So it's another asset class that had done well for a long time, and we're out of it now.
Okay, so it started a downward slide sort of the start of the year. Why did you guys decide to get out of it? Because there is if you're betting on the technology sector and the technology sector is not going to do better for a while, looking pretty good to be out of it. Well, we should have sold in January, right? But we sold a month or so ago at higher prices than where we are right now. So we do like to have a certain amount of momentum. We combine that with value.
So the thing about pure value is it sometimes takes a while, unless you're Warren Buffett, for someone to realize how brilliant I am or my team is to buy a particular stock on a particular day. It may take them years to realize just how clever we were. But if we have a bit of momentum to it as well, the market started to re-rate it higher, then that's probably a good moment to start buying into it. Where the market's starting to re-rate it lower for a whole host of reasons, and there's been a lot of pressure on the tech sector. Yeah, it's time to go. We'll live to fight another day.
Got it. Okay, let's get to your next top pick, which at the time, which was May of 2024, was CME Group. At the time, it was selling for $208 American. It is now up to $268. So a 29% return and then a 34% total return. What did you like at the time about CME?
Still like the whole exchange sector. Now, the CME is short for Chicago Mercantile Exchange. Okay. So we've been big players in the exchange sector or subsector for the last 20 odd years, right from the time when the world's major stock exchanges starting to turn from, well, they were old boys clubs. There's no other phrase for them. Country clubs. They were private member organizations. And like the Chicago Mercantile Exchange, the CME converted into for-profit companies. Historically, the members of an exchange saw that as a means to an end of making profits in their businesses. But the exchanges came to realize that with all the transactions and all the data fees and all the listing fees in the case of stock exchanges, they could make just a tremendous amount of money in their own right and cut costs for the members, which is what they've done. So in times of volatility, exchanges actually do very well because, of course, the trading goes up. So when you're trading futures, particularly when you're trading futures on stock indices or commodities or anything, in times of great volatility, the Chicago Merc is one that can do very well. And futures and options, derivatives exchanges, tend to be higher margin businesses because their products tend to be proprietary, and such is the case with the CME as well.
They're even up today, which is what we were having a look at on such a dismal day for a lot of other people. Okay.
I got to get a win somewhere.
Let's just get your third pick from May of last year, which was WW Grainger. Let's have a look at where it was at the time, $940.04 American. Again, May 6, 2024, now at $960.15, so a 2% return and a 3% total return. They do supply, I guess, distribution, is that right? Yeah,
so if you need to, one of our big themes had been, and we don't own actually Grainger at this moment either, but one of our big themes had been the supply chain for the onshoring and manufacturing, particularly in the technology space. So we were buying the most boring businesses in the world, from air conditioning companies to power companies that harden the grid to make it more robust. And Grainger would be in that category of companies that supplying products to the technology space to make the operations, the plant and equipment actually be able to function. So really boring business, but those pick and shovel business had been a very good theme for a long time. Funnily enough, with the DeepSeek, the Chinese AI solution that apparently cost $6 or $9 million to build, which I don't think anybody believes at this point, that whole sector got hit really, really hard. So it's taking a while, despite the fact the metrics in these underlying businesses are still strong. It's taken a while for that to snap back.
Got it. Okay, we are going to take a quick break. We're going to line up more of your phone calls for Brendan Caldwell when we come back. Stay tuned. Welcome back, and thanks again for joining us on the program. Let's go to the phone lines. Kevin's on the line from Belleville in Ontario. Kevin, what's your question today for Brendan?
Hi, Brendan. Thank you for taking my call. My question's on CNQ. I know it has a lot of torque to the upside once oil starts moving up. Would you be a buyer at these levels, or do you see more weakness in the coming months or years? Because Trump is talking about drilling, a lot of drilling, and I'm just thinking oil prices might stay low while he's in office. Thank you.
So 42.81 is where we are at today with Canadian Natural Resources, down a little bit.
Yes.
What's your forward thought?
Well, we like Canadian Natural Resources. It's one of our core holdings in the energy space, along with Suncor and Tourmaline. Of the two, if you say oil and gas, we sort of lump them in together. Gas is probably the better bet right now with the liquid natural gas, the LNG coming on stream. That'll give it a bit of a tailwind, a bit of a boost to the gas business. Yes, President Trump says a lot of things on the broken clock theory. Some of it may actually be accurate. But it's not as though you just turn on the tap and all of a sudden all this oil starts spilling. There's been a considerable underinvestment in oil, particularly in Canada, for a while. I don't know who forms the government any more than anybody else does, but I was just listening as I was sitting in makeup. I don't look this good naturally. When I was sitting in makeup, and Mark Carney was saying about how he wants a prosperous something and cleaner Canada. I don't think that whatever is being said about more pipelines or more energy, that the Mark Carney, who's really all about the green energy, which has its place and has its use, but I don't think he's going to be a particular friend to the oil and gas business going forward. Notwithstanding, I think there's been tremendous underinvestment, and there's going to be considerable demand for energy, because if they're going to onshore all this production, if the president's right, and if all of this production comes back to America, they're going to have to power that somehow. And there isn't going to be enough windmills or nuclear power plants or solar panels to power America if this economic conversion that he's hoping for actually comes to pass.
Yeah, he did mention in one of his first speeches when he was elected as leader that he is open to the idea of conventional energy sources and resuming some of that, but he didn't expand on that. So it's unclear. But do you feel like Canadian sentiment has changed towards it and is more on side, which could pressure then that movement forward?
It remains to be seen.
Okay. We'll leave it there. Let's go move on to Jimmy, who's calling us from Welland, Ontario. Hi, Jimmy.
Hello, Mr. Hernandez. Thank you. Question for your esteemed guest this morning, Mr. Caldwell. Seems to be opening bullish narrative about healthcare, and I'm calling about Stryker, manufacturer of healthcare products. Can I have your opinion, please?
Yeah, and Stryker's not one that we own at the moment, but we have owned it in the past. At the moment, we have Boston Scientific. We do like the sector. It's not getting hit as hard today as everything else is, or many other things are. But the aging population in the Western world, there is still going to be, I think, an increased demand for the products like stents, which open up the heart valves, and other medical products. So we do like this space. Our preference in this area is Boston Scientific, which is particularly focused or known for their stent production.
Okay, so you've gone that way instead of...
in that sector, Boston Scientific is our pick at this present time.
Got it. Okay, let's move on to James, who's calling us from Toronto with his question. Hi, James.
Hi, my question is on IBM, the 3 to 5 year outlook, and whether it's a buy, hold, or sell, and why.
Okay, thank you, James. So IBM.
Yes, so where IBM has, I don't know how to say this, they've missed every opportunity over the last 50 or more years. They had a chance to be the software providers for mainframes when mainframes were a thing that they ceded to EDS. They had a chance to be the software provider to the microcomputer, the personal computer. Well, that became Microsoft. Consulting, but is a space, but it's not one of the stocks that we own. I think between hardware and software, you're still going to have higher margins and greater growth in the software space. I think I think this correction, which is clearly greater in the when I say software, I would even include chip manufacturing. This Taiwan
the
semiconductor tariff. We will see if that actually results in more plants being built in America, because it's not as though you can just change the financial structure and all of a sudden a plant gets built in Arizona. So we are more thinking about the consulting area. Companies like, we're looking at a company called Booz Allen, which is, we own Boston, I've got the wrong one there. Doesn't matter. We're looking at the consulting area because as companies transition to AI and trying to figure out AI, I think there are higher margins perhaps in that business.
Okay, but not necessarily with IBM moving forward. There's Booz Allen.
Yeah, it's not one we own at the present, but it's that sector we're looking at perhaps as being one to revisit as and when all this settles out in the technology space.
Got it. Okay, let's get to one more phone call before we take a break. This is Jacques, who's calling from Toronto. Hi, Jacques.
Hello, good afternoon, both of you. Mr. Caldwell, you look like an actor, like Maboa. However, could you please tell me about Celestica to sell, to hold after this massacre? Thank you very much.
Massacre. I don't mind that word on a day like today. Okay, Celestica.
Yeah, 14% could be, I think the only Canadian stock that might be doing worse is Aritzia. I may be wrong about that. So I think the tariffs clearly are being seen to hit the technology space to a much greater degree. And I can't say specifically why they're targeting Celestica at this moment. I do think that all of the tech stocks that have got hit today will bounce from here. Whether they start a long-term trend going up, I'm a little more skeptical about that. This market does seem to roll over. So if Jacques' question was, would you be a seller today of it? If you absolutely have to have the cash tomorrow, then yes, you need to sell it today. But otherwise, maybe wait a day or two, because I think you'll see a bit of a bounce.
Okay, so Shopify is the worst so far today, which makes sense, 19% down.
There we are.
And yeah, Aritzia is up there as well. Okay, let's take a quick break. Brendan Caldwell sticking around to take your questions. We're back in a moment. Stay tuned. Welcome back. We want to get straight to your phone calls. Faisal is on the line from Toronto. Hi, Faisal.
Hi, good afternoon, guys. Mirella, I'm so happy to see you broadening out your presence on BNN. You're one of the few good journalists left in this country who's not afraid to ask tough questions. Brendan, before I get to my question, thank you very much for your full-page ad in national papers a week or so ago, reaffirming your confidence in the resilience of this country and its people. It's a pity that the other investment houses and the banks do not do what you're doing. My question is on Gildan. It has sold off and it's trading at a 52-week low. Would you be a buyer at this point, and what impact would the tariffs have on it? I'll hang up and listen, and thank you for taking my call.
I don't know much about Gildan. Tell me a little bit more about them.
Thank you. Two things. The caller, I couldn't think of the name of the consulting firm that we own shares in. It's Accenture. So that was the last caller. Faisal, thank you so much for your comment about the ad on the tariffs. We do think that Canada is going to be very resilient through this piece. The Gildan Activewear clothing manufacturer, and I think part of the reason the stock is off at the present time is the effect of, I mean, if you're having, clothes are generally not, as we were talking about earlier, manufactured in North America anymore. The closing down the textile mill across the railway track, as Bruce Springsteen sang 40-odd years ago. And then, those jobs ain't coming back.
Yeah.
So I don't think whatever happens, they're going to be making clothing in America in a significant way. But if you are making it in, let's pick a country, Vietnam. I don't know where Gildan gets its clothes sourced specifically. You could see the price of clothing go up. I mean, they're still going to be making and still going to be importing from Vietnam and Bangladesh and India and Pakistan.
My producer was saying actually in Latin America, which would you put that in the same?
Yeah, and I mean, there were so many. Every single country has their own particular one. Like one is 38% and one is 52%. And how do they pick the two? And why there's a tariff on Madagascar, I have no idea.
And what's the math in getting to that number? Yeah.
And I saw on this channel this morning as I was getting ready the Bloomberg interviewer drilling down on the Commerce Secretary, Howard Lutnick. And so how did you come up with these numbers? And not getting a particularly good answer. So I'm not answering your question well. I think it remains to be seen what the impact is going to be on the clothing industry. I think that probably the prices just go higher and people still need to get dressed. So probably this correction is going to be overdone for Aritzia, probably for Gildan Activewear. Probably they have a bounce from here. Because again, even if they all of a sudden start onshoring the production of clothing in America, even if they begin today, it's going to be a multi-year journey. And between now and then, people still got to put some socks on.
Got it. Okay, let's go to Charlie, who's calling us then from Montreal. Hi, Charlie.
Hi, thank you for taking my call. I'm calling about Teck Resources. I have a small position in it. I just want to know if the tariffs remain, is the Teck Resources' main income influenced a lot with the tariffs? So I'd like to know if I should buy more and average down. Thank you.
Thanks for your question. So Teck Resources, do they have exposure to the U.S.?
Well, I think everybody has exposure to just about it. I mean, the world has exposure to the U.S. They have been the economic engine for planet Earth. And as much as planet Earth has prospered, America has prospered to an even greater degree, no matter the rhetoric that may be coming out of our southern neighbors right now. So the Tech's been obviously under a lot of pressure for the last, I don't know, year and a bit, peaking out somewhere, I guess, maybe early 2024, something along those lines. I think its correction today is probably just along with the market, or perhaps a thought that base metal prices and other basic commodity prices will be under pressure if there's an economic slowdown. I do think that there's not going to be the sort of direct one-to-one tariff impact that there would be on clothes made in Vietnam, because I think the focus of the U.S. administration is to get manufacturing back. The gold, or the base metals, the copper, the coal, I think they've sold their coal, but is where you find it. And I think this is a lesson for Canada. This is a moment we have as a country to really take advantage of our position in the global dynamic. If the Americans want to do this thing, and I think that's part of the point of the ad we took out a week or so ago, is that we need to show the world that we're open for business. And that's not just about reacting to the President of the United States. It's about, okay, what do we want to be as a country when we grow up? If we're supposed to be united, why are all these interprovincial trade barriers still there? Why do we make it so difficult for a Teck Resources or energy companies or other materials companies to actually bring a mine into production? Because it is not an attractive, we are not an attractive venue right now, either to raise capital, and that's the whole other discussion around capital markets, but also to actually put the money into the ground to get the wealth of resources we have and make it available to the world market. So I think we have to take a serious look at what Canada wants to be, independent of what America wants to be. They're going to make their decisions for us. We have to understand boundaries in more than just the line on a map sense.
Got it. Okay, let's get to one more phone call before we have to take a break. Sean is on the line from Fort McMurray in Alberta. Hi, Sean.
Hello.
What's your question?
Yeah, my question is, how crazy does the expert think I am for wanting to buy Ford right now and during all the controversy? And I was hoping to hear what the experts think on the possible upside to buying Ford and the worst possible case to buying Ford right now.
Okay, thanks for your question. And on a scale of 1 to 10, how crazy is he for wanting to buy Ford right now?
I don't know Sean well. We've only just met. He's in Fort McMurray, so presumably has something to do with getting energy out of the ground. So thank you for that, Sean. I don't think you're crazy at all. It's not one that we own right this moment, but I talked about the second mouse getting the cheese in the car business. That, maybe Tesla with the same, it had the market cap of, Europe or something like that. It had this monster market cap at its peak and still is worth vastly more than the traditional U.S. car companies. There will be an opportunity to reimagine what the car business will be. And if nothing else, the current administration is going to be very partial to U.S. manufacturing. That's the whole point of doing this. We saw that there isn't going to be the kind of bizarre tariffs that people were really afraid of for Canada, where parts have to go back and forth across the Canada-U.S. border multiple times to make a single car. That's not going to affect Ford in the way that people were afraid it might. So it really was a winner out of yesterday's announcement, if there can be said to be winners. And to the extent that there is a resurgence in electric cars or other technology, I think the traditional U.S. car companies may be better value than some of the more hyped players, like
right
Tesla.
Now. Got it. Okay. We are going to take a break. When we come back, we will be done with your phone calls, but we do have top picks coming up from Brendan. We're back in a moment. Welcome back. Time now for top picks with Brendan Caldwell. His first one, forward-looking, is CBOE, and we will get him to tell us why he likes CBOE.
Well, we've actually been investors in one portfolio or another of the CBOE, the Chicago Board Options Exchange, which is, as the name implies, they trade options, which give you the right, if you buy an option, to buy or sell the underlying stock or index or commodity at a certain price for a certain length of time. So options actually have much higher margins. If you're in the business of being an exchange that trades options or any derivative product, they have much higher margins than just trading stocks, because they tend to be proprietary products, and the CBOE is a past master of proprietary products. Specifically, they've had the exclusive license, and have since forever, to trade the S&P products, so the S&P 500 options, which are one of the largest and most liquid options there is. But then they also developed a volatility index called the VIX, and they have the exclusive license on that. So we've owned the CBOE since literally before they were a public company. We bought seats, memberships on the CBOE pre their demutualization, going back 18 years, 2006, 2007. Anyhow, going forward, we just see a continuing growth in this business. Trading is becoming a bigger thing. There's talk of trading even becoming a 24-hour phenomenon. So the business of exchanges is very, very good. And weirdly, on a day like this, when the market is down, the exchanges that actually trade the market are up, because volumes just go through the roof, and the profitability is tremendous. So it's been a long, interesting ride with the CBOE, stretching back nearly 20 years for us, and it's one that we're likely to continue for a long time going forward.
Okay, the next one is a name everybody knows, which is Amazon, and you still like Amazon on the NASDAQ. Tell me why.
Well, I think to the extent that people are moving to the cloud and people are moving to AI, that Amazon is going to be a leader in that. They make so much money doing that already, and the world isn't going to be doing less cloud or less AI. I mean, is cloud resistant a thing? Is there a treatment for that? We've been very cloud resistant, but it became inevitable to have to move to the cloud. I'm comfortable dressed like this. I am a late technology adopter, but
at some point you get squeezed, right? You don't have a choice.
I've still got a BlackBerry in my pocket. I'm not kidding.
Okay.
So I think Amazon will be one of, if not the continuing dominant player in the AI and in the cloud business. So yes, it's a down day for Amazon. It's a down day for virtually everything else. But when you have me on 9 months from now, I said, why on earth did you pick Amazon 9 months ago? I think the answer will be obvious.
Now, do you like the retail side of their business? Is that why you owned it in the first place, or did you pick it up later?
We picked it up rather later. I think we've owned it since 2022, something like that. So we've been in it for 3 years. Yes, we should have been in it for 20 years. But the most recent incarnation, it's really, so the retail business, I'm not sure they even make, well, they make money, but I don't think they make very much money on it relative to this AWS business, which is probably going to be both their growth and the spinoffs from that, the data. When people say data, I do find it terrifying. It's part of the reason I still have a BlackBerry is I don't believe that it listens to me quite as much as maybe other phones
as everybody else has. Got it. Okay, let's get to your third pick, which is Costco, also a familiar name. Is that because you see a downturn and people sort of taking advantage, or Costco on its own is doing something you like?
Well, I didn't actually see the CBOE chart, but I think it's weird. We sent you these top picks a few days ago that 2 of the 3 stocks that we picked are actually up today of all days. So we tend to be value investors. We tend to like stocks where the underlying metrics, even when you come to something that's getting hit today, like the oil and gas sector, we like to own some stocks that have very good balance sheets. Well, with Costco, it's managed to combine recurring revenue, that is the membership fees, with traditional retail. And as such, and it's not getting hit also by the tariffs. So there's a big push toward lower cost merchandisers in the markets right now. I think in Canada, companies like Dollarama are doing well. But Costco's business model is still, I think, the best in the retail space, and their ability to not just withstand but actually thrive in what could be a difficult economic environment is second to none.
Got it. Brendan Caldwell, got to leave it there. Thanks very much for coming in. Appreciate that. We'll see you soon.
Thank you.
And let's take a quick look at the markets as we head to a break here on Market Call. The North American markets, as we know, are down today. 778-point drop, or 3% drop for the TSX at this hour. 215-point drop for the S&P, 3.8% down, and the NASDAQ, an almost 5% drop today. Thanks for joining us. We'll see you again tomorrow.